Welcome back to the deep dive. As someone who keeps a close eye on Bitcoin, you know the narrative can just shift on a dime.
Oh, absolutely. It's incredibly dynamic.
So today, we're going to cut through some of that noise. We've got the latest Bitcoin market intelligence briefing, and we want to give you a clearer sense of these, well, conflicting forces that seem to be pushing and pulling right now. The market's calling it consolidation, which sounds, I don't know, a bit technical, but it really means this unique tension between, solid long-term optimism and some very real immediate challenges.
That's a great way to put it.
So our mission today is pretty straightforward. Let's unpack these signals, try and understand the key things driving the market, and hopefully give you a clear picture of where things stand. Okay, let's unpack this.
Yeah, and what's fascinating here is exactly that core tension you highlighted. We're seeing these quite powerful bullish long-term indicators, but they're really clashing with some pretty significant short-term headwinds.
Right.
Right now, all eyes are really on the crucial U.S. inflation data. That's due out this week. And that's going to feed directly into the Federal Open Market Committee, the FOMC meeting next week.
Which is always a big one.
Always. These events are absolutely critical. They're going to shape the Fed's monetary policy, and we know how that impacts risk assets, like Bitcoin.
Definitely.
And it creates this real paradox. On one hand, you've got steady, persistent institutional buying, but on the other, we're seeing pretty considerable distribution on-chain from the big players, the whales, and frankly, sentiment among short-term holders seems, fragile. It's a complex mix.
An intricate environment, yeah, complex for sure. So let's get into how that tension is actually showing up in the price. What are the technical charts telling us about this consolidation phase? Because it sounds like Bitcoin has shown a bit of fight recently, getting back above $112,000 after finding some ground near $110,000.
That's right. Bitcoin's currently kind of stuck in a tight trading range. We're looking at immediate support, call it $110,000 to $111,000 roughly, and then key resistance up near $113,400.
Okay.
And this comes after, some real volatility in that pullback from the August all-time high, which was way up around $124,000.
I remember that.
But here's maybe a constructive signal to watch. That weekly close on September 7th.
Yeah.
It was actually pretty positive. It stopped what could have been a fourth straight weekly loss, which is significant.
Why is that so significant, stopping that fourth week?
Well, after 3 weeks where we saw lower highs and lower lows, that classic pattern signaling bears are in control, seeing buyers step in forcefully enough to prevent another down week suggested downward momentum might be, weakening quite a bit.
Makes sense.
And if you look broader, the total crypto market cap is sitting around $3.8 trillion. And Bitcoin's dominance, it's actually ticked up above 58% for 2 weeks straight now. That could suggest capital is rotating back into Bitcoin, maybe out of altcoins.
Interesting observation.
So you hear analysts describe the structure as constructive, if the key support holds, right? They see dips as attractive accumulation opportunities. But in the same breath, you hear fragile and range-bound. It really points to market indecision, just waiting for something to push it one way or the other.
Here's where it gets really interesting then, because that market indecision just perfectly highlights the tension you mentioned right at the start. So how do the different time frames, short, medium, long term, kind of reflect that push and pull on the charts?
It really does paint a multi-layered picture. Let's break it down. So short term, thinking, say, up to a month out. The analysis is largely neutral. Bitcoin did break out of a short-term falling trend channel. Now, that doesn't automatically mean a reversal upwards.
Right, just that the falling stop.
Exactly. It suggests a slowdown in that recent downward momentum, maybe a shift more towards horizontal range-bound trading. That's why the common recommendation right now is just hold. Key support short-term, around $107,700. Resistance, $113,500.
Okay, so short-term is basically saying wait and see. Not a clear direction yet. What kind of catalyst do you think could break that sideways action?
That's the million-dollar question, isn't it? Now, if we zoom out a bit, look at the medium-term outlook this is, 1 to 6 months, it actually stays positive. Bitcoin is still trading inside a broader rising trend channel. That signals sustained buying interest over time.
Okay, that sounds more encouraging.
It is, but there's a critical support level there at $106,000. If we see definitive break below that, that would be a negative signal. The overall techno picture here is positive, but, and this is important, there's a cautionary note.
Oh, what's that?
The Relative Strength Index, the RSI. On this medium-term chart, it's actually showing a falling trend. Price is generally holding up or rising slowly, but momentum is weakening. That's what we call a bearish divergence.
Ah, okay. I've heard of that.
Yeah, it's often an early warning sign. It doesn't guarantee a price drop, but it suggests potential underlying weakness, even if the price haven't fully rolled over yet. Something to watch.
That bearish divergence is definitely a yellow flag then. Does that imply even the positive long-term view might be shaky, or is the bigger picture still strong?
Well, that brings us to the long-term perspective, looking out maybe 1 to 6 quarters. And actually, that view is quite robust. Still positive. The asset is clearly trading within a long-term rising trend channel. That reflects growing investor optimism, a healthy primary trend.
Okay.
And interestingly, just like the medium-term view, the primary long-term support test also lines up right around that $106,000 level.
So that 106K level is really crucial across multiple time frames then.
Absolutely critical.
Oh, yeah.
So what this all means, this sort of conflict between the signals, is that it creates a vital decision zone for the market. Think of it as roughly between $106,000 on the low end and maybe $114,000 on the high end.
Okay, the battleground.
Exactly. It's like a tug of war. Price action in here is likely to be choppy, kind of directionless. But how it breaks out of this range, that's going to signal who's taking control for the next few months, the bulls or the bears. A sustained move above $114,000. That favors the bulls, suggests the uptrend continues.
And the downside.
A breakdown below that $106,000 support, that would invalidate the longer-term bullish structure. And it could suggest a more significant correction might be on the cards.
Got it. That decision zone gives us really clear levels to watch. Okay, but let's move beyond the charts for a minute. What are the actual people, the investors, doing? It feels like we're seeing quite different behaviors, almost a tale of two cohorts, wouldn't you say?
We absolutely are. The on-chain data shows a really significant divergence here. On one side, we've seen a massive sell-off from whale-sized entities. These are the really big holders.
How big are we talking?
Reports indicate they distributed roughly 115,000 BTC. That's worth about $12.7 billion. It's actually the largest whale sell-off we've seen since mid-2022.
Wow, $12.7 billion. That signals some serious caution, maybe.
Intense risk aversion, yeah. Among some large investors, definitely. And that's a primary source of the selling pressure we've been feeling in the market.
Okay, that makes sense. How does that kind of massive whale movement ripple through, especially for those short-term holders we mentioned earlier, the ones with fragile sentiment?
Well, it hit them hard.
Yeah.
The STH is, again, that's wallets holding Bitcoin for less than 155 days. Their profitability just collapsed. It went from over 90% of them being in profit down to just 42%. That puts them under real stress.
Ouch. Has it recovered at all?
It has rebounded somewhat. Yeah, back up to around 60% profitability now. But the sentiment for this group is still described as, neutral but fragile. To really restore confidence and confirm momentum is back, we'd need to see price push above that $114,000 to $116,000 range. That's where a lot of them bought in recently.
Right.
And here's the other side of that tale over two cohorts. Despite all this whale selling, we're actually seeing a pretty constructive buy-the-dip response from other investors.
Ah, so someone is buying what the whales are selling.
Precisely. We're seeing accumulation happening in that $108,000, $116,000 range. It's essentially filling in what traders sometimes call a low liquidity air gap. Think of it like building a stronger foundation where the price previously sliced through very quickly.
Okay, adding stability.
Exactly. So while some big holders are de-risking, another group is stepping in, absorbing that supply. And that's what's creating this consolidation, this range-bound action. It really highlights this fundamental conflict. The network itself, its health is great, record-high security metrics, but that's clashing with fragile short-term sentiment and some big players taking risk off the table.
Fascinating.
And all this makes that $104,000 to $106,000 support zone just a critical battleground to watch.
It really sounds like a financial game of hot potato, but instead of dropping it, you've got these conviction buyers eagerly catching the Bitcoin from the profit takers. That's quite a display of market psychology, isn't it?
It really is.
Okay, let's widen the lens even more now. What about the external forces? The key market catalysts, thinking macro, thinking institutional, that might be amplifying all this?
Well, the market's attention is definitely laser-focused on upcoming macro data. This week's Producer Price Index, the PPI, and the Consumer Price Index, CPI. They're absolutely key.
What are people expecting?
Analysts are generally looking for about a 0.3% month-over-month increase for both headline and core measures for August. And this inflation data, it's going to be a critical input for that FOMC meeting we mentioned, the one scheduled for September 17th.
Okay, so inflation feeds the Fed decision. Now, you mentioned earlier that a rate cut might already be baked in or maybe even seen as a negative sign about the economy. How should people think about that FOMC meeting then? Is it a buy the rumor, sell the news kind of thing? Or could institutional buying maybe cushion any negative reaction?
That's the tricky part. Right now, if you look at market pricing like the CME FedWatch tool, it's showing basically a 100% probability of an interest rate cut at that meeting.
A done deal, seemingly. Seemingly. But that's where the nuance comes in. It complicates that simple story of rate cuts mean markets go up. Because yes, historically, looser monetary policy is good for risk assets like Bitcoin, but the reaction isn't guaranteed.
Why not?
Well, some analysts think a 25 basis point cut might just be fully priced in already. No surprise factor. Plus, you raise a good point. Such a move could also be read as a signal of underlying economic weakness, especially after that soft jobs report last week.
Ah, okay, so it could actually dampen risk appetite.
It could. Instead of sparking a big rally, it might just keep prices kind of subdued or even cause a dip if the Fed's commentary is cautious.
That's a really critical nuance. Okay, so if the rate cut itself might not be the magic bullet, what is the most important macro signal for the market to get some real direction? And shifting gears slightly, what about the institutions? We keep hearing about this persistent bid from corporations. Is that holding strong despite these macro uncertainties? Oh, that persistent institutional bid seems very real. And largely unfazed, actually, by the short-term macro picture. I mean, look at strategy. They just announced another purchase, 1,955 more BTC. Their total holdings are now, 638,460 Bitcoin. It's staggering.
It keeps growing.
And it's part of this broader trend. You've got Metaplanet, that Tokyo-listed firm. They just bought another 136 BTC for about $15.2 million. Their total is over 20,000 BTC now, and they have this really aggressive target of hitting 100,000 BTC by 2026. That shows incredible long-term corporate conviction.
Wow, 100K target.
And maybe the biggest milestone. Data from Bitcoin treasuries just showed that public companies collectively now hold over 1 million BTC on their balance sheets.
1 million held by public companies.
1 million, valued at over $111 billion. That really underscores a structural shift, how corporations are starting to view Bitcoin as a legitimate treasury reserve asset.
That's incredible, a structural shift indeed.
And even with that milestone, many analysts believe institutional adoption is still, in its infancy. There's potentially significant capital still on the sidelines waiting to be deployed.
1 million Bitcoin on corporate balance sheets. That number just really lands. It makes you think how different the corporate treasury conversation is today versus just, 3 or 4 years ago?
Night and day.
It feels like a parallel to how gold or even fiat currencies became accepted reserves over time. But maybe the institutional floodgates are, like you said, still only partly open.
Okay, let's shift focus again, maybe down to the foundations, the crypto ecosystem itself, the technology, what new developments are shaping how digital assets are actually used, especially around financial plumbing.
Well, one major development getting attention is from Stripe, the payments giant. They're partnering with Paradigm, the crypto VC firm. They've announced plans for a new Layer 1 blockchain. It's called Tempo.
Tempo, what's it for? It's specifically designed for stablecoins. The idea is to support payments, remittances, even things like microtransactions. And the partners involved, Deutsche Bank, OpenAI, Shopify, that signals a really deep push by established tech and finance players into building this core infrastructure.
That's big names getting involved. What else?
In another sign of market maturation, look at Bybit, the crypto exchange. They're actually restoring their app and website in India.
Oh, interesting. After pulling back.
Exactly. It reflects a re-engagement with a massive, fast-growing crypto market. It suggests maybe a more positive outlook on the regulatory environment there. That's significant for global adoption.
Definitely significant for global reach. India's huge. Now, speaking of Bitcoin itself, how is it evolving beyond just being a store of value? Are there developments expanding its own utility?
Yeah, there's a strong push there, especially around bringing stablecoins onto Bitcoin's scaling layers. Tether, for instance, the issuer of USDT, they've announced plans to issue USDT on the RGB protocol.
RGB? How does that work with Bitcoin?
RGB is a system designed to work on Bitcoin and also integrate with the Lightning Network. The goal is to create a, quote, truly native stablecoin experience on Bitcoin. It uses something called client-side validation.
Okay, what does that mean practically?
Practically, it means you can verify transactions efficiently and privately without clogging up Bitcoin's main blockchain. And the integration with Lightning, that's key. It promises instant, super low-cost stablecoin transactions. That could really broaden Bitcoin's use for actual payments for commerce.
That really could be a game changer for everyday use, couldn't it? Making Bitcoin feel less like digital gold and more like, well, digital cash. But this layer 2 space is moving so fast. Are there risks? Innovation often comes with bumps in the road.
Indeed. And we have a recent cautionary tale, unfortunately. Kinto, which was an Ethereum-based Layer 2 network, is actually shutting down.
Oh no, what happened?
They suffered a $1.55 million exploit back in July. An attacker basically used a known vulnerability, drained funds, and their native token just plummeted, lost like 95% of its value.
That's rough.
Yeah. And despite trying to recover and find new funding, they couldn't secure it. So they made the tough decision to wind down operations. It's a stark reminder, really, of the technical hurdles, the financial risks these new scaling solutions face as they try to mature. Security and resilience are just paramount.
A tough lesson there. Okay, so we've covered a huge amount of ground today. We've looked at the tight trading ranges, the whales selling, the institutions buying, new infrastructure being built, Bitcoin's own evolution. So what does this all mean for you listening right now? Ultimately, it feels like we're witnessing Bitcoin's maturity being tested, doesn't it? Can its strong, long-term story, that growing institutional embrace, overcome these short-term nerves, the profit-taking, the macro fog? It's more than just a market phase. It feels like a defining moment for its future identity. What you're really seeing is this kind of transfer of supply, right? From maybe weaker short-term hands to stronger long-term conviction buyers.
That's a perfect summary to tie it all together. The bullish long-term case. It's definitely supported by that potentially more dovish macro outlook, the unwavering institutional accumulation we talked about, these high-profile corporate strategies, and importantly, that expanding utility beyond just storing value. But those positive long-term vibes are being held in check right now by pretty potent short-term headwinds.
Yeah.
That's significant selling from some whale accounts, the fragile sentiment among STHs.
Yeah.
It's all led to this technically indecisive market we're in. So for you to monitor, here are the key signposts we've discussed.
Lay them out for us.
Okay. Key price levels. You really want to watch for a sustained break above $114,300. That would be the bullish signal. On the flip side, a definitive break below $104,100. That'll be a significant bearish development. It could potentially open the door to a deeper slide, maybe towards the $93,000, $95,000 RIA.
Got it. 114.3 up, 104.1 down. What else?
Critical events. No surprise here. This week's U.S. inflation reports, the PPI and CPI. And then the big one next week, the FOMC meeting on September 17th. The Fed's decision, but maybe more importantly, their forward guidance, that's likely what resolves the market's current indecision.
Okay. Inflation and the Fed. And finally,
on-chain flows. Keep an eye on those whale wallet movements. Are they still selling heavily? And watch the spot ETF flows. If we see whale selling ease up and maybe a return to net inflows for the ETFs, that would signal the current selling pressure might be abating.
excellent. Clear signpost to watch. Thank you for diving deep with us today. Honestly, understanding these complex, interconnected factors, it really is what gives you that edge when you're trying to navigate such a dynamic market like Bitcoin's. It's just this constant dance between psychology, economics, and technology, isn't it?
It really is. And as you think about all these dynamics, the layer 2 stuff happening on Bitcoin, the big corporations treating it like a treasury asset, it does raise a provocative thought. Are we getting closer to a point where Bitcoin's utility, its use for payments and commerce, could actually start to outweigh its role purely as a store of value? Despite all this short-term volatility, what are your thoughts on that evolving identity? Is that shift finally starting to happen?
Definitely something to chew on. Until next time, keep exploring.